Welcome to the future of money. Come with us on this journey into the world of Bitcoin, blockchain and crypto projects. You're going to meet the trailblazers. These people have changed my life and they may very well do the same for you. Welcome back, hard forkers, to 1 Bitcoin and 32 Ethereum. We've got a new project that we're all pretty familiar with. We've had involvement in it for a while, trading it, using it. And we're joined today by Mark, who's one of the key members of the Statera community. So the purposes of the video, get a high-level overview of that project for you. We'll explain it a bit more. And then we'll do a bit of a Q&A with Mark. So thank you for coming back to join us, Mr. Gonzo and Stefano. And Mark, a very special welcome to you, sir.
Thanks for having me. No, great to be here, yes. Thanks.
Yeah. So look, as I say, we're quite familiar with Statera, have been for a number of months. So if you could maybe kick it off by just giving us a bit of a high-level overview of the project and the role that you've played. And then we'll get into a Q&A.
Yeah, it's really, it's kind of a project much more akin to Bitcoin than to, ADA or Tron, where you kind of have a very centralized authority that is leading the project, leading the vision. And Statera is much more decentralized, and the founder himself just kind of dropped the project in the world and then walked away, still supports in the background, supports with the tech and things like that, but is not the Justin's son who's on Twitter every day trying to hype it up and pay Lindsay Lohan to shill the coin. And so it's a very decentralized, community-driven project. And I think at its basics, it's just looking to be the leading deflationary cryptocurrency. And so you kind of have inflationary with Bitcoin. You have a static supply with something like maybe Nano, where your supply is the supply is it and it's all released. And then you have deflationary, which is Statera. Then also you have elastic supply tokens that change their supply. And so this is Statera is trying to be the deflationary token.
Okay, fantastic. I mean, a key thing sort of looking at your project, is the decentralization of it as well. Could you maybe just talk us through? I mean, obviously projects need that core team to get it launched, but could you tell us a bit more about how sort of Statera is sort of ultimately going to achieve that decentralized aspect to it, and where it's sort of at in that evolution, maybe?
Yeah, so it's really, you have to design it inherently that way. So the smart contract is immutable. You can't change the smart contract. The keys have been burned to it, so there's no upgrading or changing of it. And so with that, the token itself is now set forever in perpetuity and will be the way it is forever into the future, and will always burn 1% of every transaction, and that's the deflation. And so when you set a contract up like that, then there is no central power that can change anything or adjust any parameters of it. So the community knows this is what the token will be, and you can't change anything about it. And so then they can take more ownership over it. Also, the supply from the beginning was very decentralized. If you go to Etherscan and look at the top holders, the top holders have less than 4% each. And so that very decentralized tokenomics also leads to a community-driven project because everybody has a share of it, and it's not, the 20% token holders working to make the one person who holds 80% of supply super rich, and all of them just kind of rich. And so it's from its very basics and its very development, it lended itself to being community-driven. And now what we've seen is it just become kind of a darling of the Reddits and the 4chans and these social networks because it's so decentralized and there's no figurehead in front of it, and the ideas behind it are very interesting, forward-looking, and fill a niche in cryptocurrencies that other tokens don't fill. And so with that, the community really just mostly through Telegram is how most of the people got together. And as people on the Telegram just gave out good ideas and wrote some interesting articles around the interwebs, people just got add it to the core team. And that core team is really just the people who reach out to YouTubers like yourself and to marketing people and to exchanges and kind of speak for Statera, but literally any community member could send an email to Huobi and say, I want to list Statera, and then go through whatever hoops Huobi wants you to go through, because there is no, CEO, there is no corporation behind it. And so it'd be the same as going to, Binance and asking them to list Dogecoin, 2 years ago, 4 years ago. And so it's much more in the vein of any of those tokens that are fully released, like a Bitcoin or Dogecoin.
Yep. Yeah, I can confirm it's not centralized, because I know when I've sort of reached out to you guys, there's a lot of different people. Sort of, it was coordinating to have this chat with you. And its issues. But listen, thanks very much for joining us once again. Stefano, do you have any comments or questions at this point?
Well, not really, because it's it's the beginning. So I've been pretty familiar with Statera since the hack that you guys got on Balancer. Obviously the fact that you got back the money, and I think that was one of the first cases of a community, a decentralized community, fairly anonymous on that side as well, managing to get back the funds and the money for the people. That was a very, very cool thing. One question that I have is more on the technical part of that. And I remember trying to ask that multiple times on Telegram as well, and on Discord too, but never getting a proper answer on that. You guys basically have that system where every time that you do a transaction, part of the Statera is being burned and so on. And so the token goes down in the supply. But in theory, if I understood correctly, when there is the rebase in the contract, then you also have the movements of Statera per se, and therefore you should have a burn mechanism for that. Is it possible, in a very simple way, to actually go on Etherscan right now and see what are those rebase in the contract, and so actually see exactly where is that burning mechanism happening when on the smart contract per se, on the rebase part, not on the transfer of Statera per se, but on the rebase? Would that be possible?
Yeah, it's a little bit different for a rebase, because a rebase is usually once a day and it moves supply up or down. And with the deflationary setting of Statera, it's 1% every time on every transaction. And literally, if you send Statera from one wallet to another, and then you go to that send, you'll see that, if you send 100 tokens from one wallet to another, you'll see that 99 tokens go to that wallet that you sent it to. And then one token goes to the addresses 0x00000, 17 digits, whatever it is. And that's the burn address. And actually, if you go to the Etherscan contract, you can go to the 0x00000, all zeros address, and see all the tokens that have been sent there. And those are all the burns. And that address is unaccessible. And actually, I want to say every smart contract, but I'm pretty sure it's every smart contract. That address is the burn address. It's a dead address on most smart contracts. I assume you could maybe code it so that it wasn't for your smart contract. But 9 times out of 10, that is the burn address for any token. And sometimes people just send tokens there to destroy them for if they tell their community, we're going to reduce the supply of our token to help the tokenomics, and they send it to that 0x000 address. But Statera has it coded into the smart contract that every time you send in a call to transfer tokens, whether it's in Uniswap, whether it's to a liquidity pool, whether it's to another wallet, 1% of that amount is set to the 0x000 account. So every single trade on Uniswap, every single transfer, every single trade on Balancer, anything that's on chain, every single transaction, you'll see part of it goes to that 0x000. And you can go to your own address and look at your Statera sends, and you'll see part of that send goes to that burn address. And so that's where the burn is happening, and where the supply change is happening, is with every transaction going to that 0 address.
Yeah, no, on that, I agree, because I also had to call out on Twitter one of the projects that we reviewed that they were not using the 0x00 as a burn address, and they used their own one. They built up a smart contract on their own one, calling the burning address, and they were yeah, but we destroyed the keys, so we have no access on that. And I was yeah, but it's still a weird thing to do, because you already have something there in place. That's fine. But my question is, like, I really need to be like very specific on this, because like it's really, really an interest of mine. How can I see the rebase on Balancer? Like I want to see that transaction that I never managed to find that, because the 1%, it's fine. And obviously it's very important for people that don't understand the project. And it's true, you do get like the 1% in every single transaction. The rebase on the pool, that's what I want to see. Like when the contract like balance out and it's like, okay, we need to
the rebalancing. Okay.
Yeah, the rebalancing of the Balancer pool. How can I see that? Because you say that it's happening once a day. How do I do that? I really want to see that.
No, so rebasing is a completely separate function, and that's something that like Ampleforth does, and that's rebasing.
Sorry,
for Balancer.
Yeah, sorry.
No worries. No, this is for everybody. For Balancer, it's rebalancing each time. And if you go to Balancer and you look at the swaps, every time there's a swap, that's a rebalance. And so let's say my pool has 10 Ether and 9 Statera in it. Let's say $10 of Ether and $9 of Statera. When someone goes to trade Statera or trade Ether, the price will change so that the pool readjusts to be balanced at $9.50 of Ether, $9.50 of Statera. And so with each swap, you'd have to go into the swap and see what it's exchanging for. And the price difference of what it's exchanging for is the rebalancing. So if I go to buy $10,000 of Statera on Uniswap, I'll get some slippage. I'll get like 0.5% or 1% slippage, which means that I'll get a little less than I don't actually get 10 cents per Statera. It's going to cost me 11 cents because I'm slipping the price up. I'm pushing the price up by buying a bunch of Statera. And that slippage is what helps to rebalance the pool and make it so that the amount of Ether dollar amount is equal to the amount of Statera dollar amount. So every single transaction, the pool is changing the prices of the two assets. Not directly. It's obviously you aren't changing the prices of Ether constantly, actually changing the universal price of Ether. But within that pool, what that pool sees Ether as worth is getting rebalanced with every transaction. And so it will get unbalanced, as if everybody wants to sell Statera, then it's going to get unbalanced and it's going to adjust the price of Statera to up the demand eventually so that people start buying Statera and rebalance it again. So it's with every swap that you see the rebalance, and you'd have to actually do the math to see the change in the price to know how much it rebalanced. And sometimes even on the Balancer pools, you'll see swaps of, like, if the pool has wrapped BTC and Link and Statera in it, sometimes it will just trade Link for WBTC to rebalance that part of it. And it's constantly matching prices with all different swaps that people are asking for. So if this person wants to trade WBTC for Link and your pool has that, it looks for the pool that is unbalanced, the pool that has the best fee on it, and balances all of those different things between the pools and draws from the pool that it can find the best slippage and the best fee for that transaction. And so by using the exchange, you're helping the whole, all the Balancer pools to rebalance with each swap of tokens that you do. Sorry, it's really complex. I wish I could make it simpler, but
no, that's fine. But that is done by default by Balancer. Like that's not Statera that has like written anything in the smart contract for that. Because if I'm looking like the marketing or like the communication part of Statera, it's actually says that that's one of the feature that you guys have implemented. But according to what you say, it doesn't seem that that's something that you have done. Like it's the fact that you're using Balancer that allows for that, but it's by default in every single pool that is on Balancer, on Uniswap, or on anything else.
Yeah, exactly. Every single pool, that's an automatic market maker, the AMM, the liquidity pools, all of them work that way. All of them balance and rebalance. And what Statera does through that deflation is you're actually, and there's some good YouTube videos explaining this. If you search for like Statera explained, GC is the name of the YouTube videos, or the creator. But it goes through how that deflation almost creates these, on the macro level, these vibrations in price, because the Balancer, as it rebalances the prices, it expects supplies to stay the same, right? But if one of the supplies goes down with each rebalance, it has to rebalance again, and it's not hard-coded into Uniswap's AMM to foresee those supply changes happening. And so what that creates, that change in supply that the Uniswap pool is not pre-programmed for, it has to rebalance more, which then on the macro level, not every single transaction, but on the macro level will create more volume. And you see this with rebasing tokens like Ampleforth. Because of that rebase every day, it forces a new rebalance because it changes the supply in the AMM. And so what deflation does is helps to increase the volume and increase the arbitrage, not only for the AMM, but also for bots, for traders. But when traders and bots capitalize on that arbitrage, then it helps the people who are holding because it deflates the supply for everybody, which pushes on positive price pressure. And then it also increases the fees that are paid to liquidity providers. So you want that arbitrage, you want that imbalance, you want that vibration happening in the supply and the price. And so that's what the marketing materials are pointing towards when they're talking about the rebalancing, is that the deflation is creating more of that rebalancing needing to happen and creating more of an inefficiency in those two prices because of the change in supply. And that gap is what gets filled by arbitrageurs and traders, which then increases the volume for everybody. And that increased volume decreases supply and increases fees for liquidity providers.
You mentioned that like basically like Statera is the, well, not you, but like the community has always mentioned that like Statera is the index fund, basically is the system to have like an index fund on that. Could have not get exactly the same result at that point if I have a stable coin inside that? Why would I need like a deflationary token for actually having like an index fund on a basket of like BTC and Ethereum, for example? If the system is rebalancing automatically, why would I need something like that to create an index fund?
Yeah, no, you can create an index fund with any token. What it does is creates a deflationary index fund. Okay. So you're creating an index fund that is deflating in supply, and also creating those arbitrage opportunities, which is increasing your volume. So like literally, if you just paired it with Apple stock, let's say Apple Synthetics makes an Apple stock, and you paired it with Apple, that basket is now deflationary. Now you've created a deflationary Apple stock, and so the supply of that basket of that stock is reducing, and then also that pool, if it's an AMM, is constantly rebalancing. And that change in supply is creating more volume as that pool works to rebalance and people work to arbitrage that imbalance in supply.
Okay. Well, I don't have other questions at the moment. Thank you.
Yeah, no, thank you. And it is interesting though too. I mean, this is again true of every token, but Statera is trying to make it a part of the central theory. Is by pegging it to all these different liquidity pools and all these different balancer pools. The price of Statera, since it's threaded through all the different ones, does become an index fund like asset in of itself because it is adjusting to each of these different pools and each of these different AMMs, so that every time Link's price goes up, that pool needs to sell some Link to buy some Statera. So the price of Statera gets linked to every pool it's in and every other asset it's balanced against. And so you might hear people talking about that idea of just buying Statera, you're exposing yourself to these price pressures of all these tokens. And if another project intentionally threaded their token through all these different pools, it would do the same. But that's a base part of Statera as a project, is having as many of these pools as possible and as many of these different balancer and Uniswap pools to diversify the exposure to all these different prices as much as possible for the Statera token. So it's a deflationary play on all of these other crypto assets.
Okay, excellent. Mr. Gonzo, any questions at this point?
Yeah. Sorry. A lot of times when you're talking about liquidity pools and, AMM exchanges, there's the factor of impermanent loss. How does Statera compare to, say, like Uniswap LPs in regards to impermanent loss?
Yeah, so obviously the idea of that deflation and threading it through all the different pools, which creates a lot of arbitrage between the different pools, is to increase volume. And so Uniswap itself will tell you the number one way to offset impermanent loss. I mean, A is not to have the prices to move, obviously, but B is to increase your volume. And the more you increase volume, the more you get fees, and those fees are what offsets your impermanent loss. So the hope is what you gain in fees offsets what you lose in impermanent loss. And so A, increasing the volume. And then B, if you actually look at impermanent loss, and this is true for any pool, and actually do the math, if you get an astronomical rise of, like 100x, the impermanent loss is going to be pretty bad. But even if you get a 500% increase, you're looking at about 25% loss in impermanent loss. And if you hold in that LP or in that liquidity pool for an entire year, you're likely going to make back 25% at least on your fees, if not more. And there's a great calculator made by the community. If you go to the community and ask for it, but also it's bit.ly/STA profit. So bit.ly/STA profit. And there's a Google sheet where you can type in the volume that the pool is getting and type in the overall size of the pool, and that will give you an idea of what your fees will be that you earn in a year. And then go to the impermanent loss tab, and you can see what impermanent loss does versus what your fees gained. And so over time, if you get in and out really fast, if you jump in and STA doubles in price and then you get out of the LP, you're going to take a hit because you got the full impermanent loss and none of the time to get those fees for the volume. So the longer you stay in, the more you make it back with the volume and the fees. And also, if you're in it with STA and Ether, if STA doubles, but then Ether doubles, your impermanent loss is going to be much less, if not zero, because what it really is the relative prices of the two assets as opposed to just the prices going up in general. So the more balanced they are in their changes in price, the less impermanent loss you'll get also. So if you pick the right pool and you pick a pool where both the assets are appreciating assets, then you're better off too on impermanent loss.
And then putting some stable coins in there helps balance it out too, right?
Definitely, yeah. And there's a lot of plays of that, of pools that do like a 60% stable coin and then like 40% any token, really.
Yeah. No, it's cool. I've been using some funds on some other platforms, and just playing with that balance of like how much stable coin do you need, and like you don't want one thing that's getting like ripping too hard because then it just wrecks the other one. Yeah, it's a tricky game, the impermanent loss. But basically,
yeah, it's definitely not something to do blindly. You should know what the calculations are, know what your targets are, and and I always recommend whatever you do, you should always not investment advice, but stay as diversified as possible, right? And keep some separate, keep some in a liquidity pool, keep some in a balancer pool, like spread it out so that you're getting the benefits of all of them without over exposing yourself to the negatives of any one of them. But I can tell you from experience, if you stay in long enough, you can definitely make it up with fees, especially with high volumes.
Nice.
Can you tell us a wee bit about how the project and the community is growing since its inception?
Yeah, it's definitely grown a lot. Definitely started with just a couple hundred people on Telegram, and maybe tens of thousands of dollars locked up on Balancer, and now it's hundreds of thousands. It's peaked at millions at times, locked across the different pools, and same with the volume. Started out very small and nascent, and then has grown to tens of thousands, hundreds of thousands in volumes many days of the month, and so it's really organically grown, and really the community has taken on ownership, and everybody that all the upgrades or the changes that you've seen has been the community proposing these ideas and giving up these ideas, and the core developers still helping to, we just recently released wrapped Statera, which makes it so that it doesn't, the deflation doesn't happen every single time you trade it. And that why you need that is for something like Aave or something like even Balancer Pool to put directly into Balancer Pool. You can't have the deflation. That's how it was hacked back in June. was the balancer pool doesn't actually call the contract every single transaction that's made. It waits to call that function. And so someone was able to trade, hundreds of or millions of dollars of Statera, and then told balancer pool to then check Etherscan for what the change was, which completely off balanced the pool and allowed them to pull out everything from the pool on balancer. And so that with the wrap Statera, which is a new upgrade to the protocol, you can now put wrap Statera into any protocol. And since there isn't that deflation, it's no longer vulnerable into the platform doesn't have to code against it. But like Uniswap is coded so that that's not an issue. So you can trade deflationary assets on Uniswap. And so it's really just growing as the community has new ideas and grows it.
Sure. Stefano, any closing questions or thoughts?
Of course, which is what's next? Because I know that like a lot of people, as mentioned, for example, giving the option of having like more pools or like creating additional pools to like kind of like pushing that deflationary aspects in place. What's coming for Statera? What can someone that is like entering now expecting in the next like, few months, a year from now and so on?
Yeah, and I think to that I would ask the audience, what is next for Statera? I mean, that's kind of the beauty of the coin, right? I mean, it's completely, that's the thing is anybody can become a stakeholder in it by buying some Statera or can code whatever they want. If someone wants to code a cross-chain bridge between, Binance coin and Ethereum, then boom, Statera's on Binance, at least Binance chain. If somebody wants to put in a proposal on SushiSwap to get an ONSIN or put in a proposal to Aave to get on the lending platform, like all of these are things the community can and will do and will attempt to do and continue to push forward. But I think that's really the central narrative is just spreading the ecosystem. So getting onto lending platforms, like what is a deflationary loan and what, economics are there around a deflationary loan. Or deflationary collateral. And so I think that's that's the most interesting part about the project is at its fundamental core, it's really pushing forward a economic thesis of what does deflation do for economics and for holders. And over time, you'll see that deflation, it really incentivizes holding and incentivizes savings. And people have ragged on deflation for decades, but there's a lot of great research from the UK, from Switzerland, where they've shown deflation is actually very beneficial for an economy. And so becoming a deflationary asset that is used the world around for transacting value is something that could become a very interesting and large social experiment to see what people do with an asset or with a currency that is deflationary globally and immutable. So at its core, its very central idea is interesting enough, but where we go next is really about that ecosystem and growing of it to find out what happens when you plug deflation into all of these new economies and new platforms.
Yep.
And in order for like a user to get involved on like those decision-based or like suggestions and so on, Telegram, Discord, is there like any special groups that is not like available online in a super simple way? How does it work, obviously?
Right. Yeah. I mean, Telegram's the number one way, and just pitching ideas on the Telegram channel, the Statera channel. We're on Discord, but it's not as lively there. Telegram's definitely the best place. And, the people who have kind of gone on to, help out with the core team are people who, are tweeting a lot or writing articles on PublishOX or writing posts on Reddit or writing posts on 4chan and spreading the news of Statera and spreading these ideas and putting new ideas out on Telegram. So really just getting involved in the community and sitting back and watching for a week or two and then starting to plug in your own ideas and starting to get into the community is really how you do it. That's how, I personally did it in June. I just started writing some articles on PublishOX about it, and I was just interested in the project and not closely affiliated to it at all. I didn't help found it or anything, but just helped at the very beginning. And then they were just like, hey, come help us out more directly. And then we all started moving forward together. So jump on Telegram and start giving us your ideas.
I'm sure Stefano will.
I've been like on Discord many times asking questions. I prefer Discord on Telegram, to be honest. But
yeah, I know a lot of people do. It's a little more organized.
We'll be looking at the project on the regular on our weekly show. Mr. Gonzo, any final questions while we've got Mark with us?
Yeah, just about the funds or the portfolios that you guys have listed. There's 6 of them on the site, right?
Yes, yeah.
And so how did those come about? Were they proposed by the community, or is that like someone picked them? And do they ever get, like, I know they internally get rebalanced depending on the volume, but like, you know, ETH is due for a big run, so you put a bit more percentage allocation of the ETH. Does that ever get rebalanced, and who does that?
Yeah, so the ones that you see on the website were created just by the kind of that core team who's got together and discussed, but also it was taken in from feedback from the community of like, hey, we really want to see a fund with this, or we want to see a fund with this theme, or with this specific token. So organically it bubbles up from the community. But really the genius of this is that you can go on Uniswap and pair Statera with whatever token you want. And we've seen this happen many times of people building a balancer pool with Statera and, 3 of their favorite tokens, and they make their own, 4 token index. And I think if any of those indexes, get to 6 figures or something like that, it gets a little bigger, the team would probably be more than happy to throw it on our website and add it as one of the funds that you can jump into. So it's completely community governed, and you can jump on Bouncer or Uniswap and build a pool instantly and make your own fund of whatever mix you want.
Right. Money talks.
Right. Yeah, exactly. Yeah. Well, I mean, money is a function of use, right? Or a community. So the money shows that it's being used and that the community wants it by having a larger fund in it.
Yep. Fantastic. Well, listen, the audience will be looking at this on the regular on our 1BTC and 32 Ethereum shows. So stay with us. Shoot us off any questions you've got. Now, Mark, before you disappear here, you mentioned off camera you're also involved in another project. Do you want to give us a brief rundown of that?
Yeah, definitely. Statera my night job, my day job. I'm the CEO over at XBTC, and we were talking about rebasing earlier and why I know a little bit about it. It's a rebasing token that rebases to Bitcoin dominance. So it's basically an open market synthetic that's decentralized that tracks Bitcoin dominance. So it gives you a way to trade Bitcoin dominance on the open market without any central authority or central marketplace like a Synthetics or like a FTX or a BitMEX, where you have to go to access these more novel price oracles. It provides an open market price oracle on Bitcoin dominance. And as we saw in 2017, Bitcoin dominance is near like 60% right now. And last time it went down to like 30%. So that's kind of the bet, is that peg, that dominance will go down, which will increase the rebases, the positive nature of them and the frequency of them as that dominance falls. And so, it's another interesting, open project that's trying to decentralize finance, and that's kind of like why we're all here, right? So that's my passion project in the daytime. But as you can see, it's nighttime now, so I'm talking Statera.
Well, listen, we'll put a link below both to all the relevant Statera pages and also to that, Mark. So. Thank you very much for your time. We appreciate it. And yeah, it's been great talking with you.
Yeah, no, great. Thank you so much for having me on, guys. This has been awesome. Thanks.
Yeah, cheers now. So audience, Stefano and Jordan will be back here next week. So any questions you've got on Statera, please send them our way and we will do our best to answer those for you. Thanks everyone for watching.